2025 has been the year of metals, of gold, which soared above $4,500 an ounce, of silver, which was the new gold, of copper, of platinum, and of palladium. Heavy metal turned music to the ears of traders, reaching decibels few would have dared to pencil in a year ago. In India, the yellow metal almost doubled from January levels, while silver prices have at times more than doubled or even tripled across major cities. Even after Monday's crash, bullion still sits miles ahead of most other asset classes this calendar year. Gold hit a lifetime high of 1,37,767 rupee per 10 grams in the spot market on Monday, 29th of December, up 81% this year. But what really shone was silver. It hit a lifetime high of 2,35,922 per kilo on Monday, up a whopping 175% this year. Other metals have performed spectacularly as well. Platinum has skyrocketed 136%, palladium 77%, and the humble but critical copper 42%. In comparison, the Nifty has risen just 9%, while the Sensex is up 8% in the same period, reflective of the global geopolitical uncertainty. Ironically, it's this uncertainty which is feeding the metals frenzy, creating a so-called Goldilocks moment for precious and other metals. The sentiment was jolted on Monday. Gold dropped over 4% globally and around 2% in the domestic market. Silver fell harder to profit booking, plunging 9% in a single day after smashing through the $80 an ounce barrier. But even after this fall, silver remains the hottest trade in town. Global prices are still up, powered by an unusual cocktail, safe haven buying plus a genuine industrial squeeze. From solar panels and EVs to high-end electronics, demand has exploded just as mine supply and scrap flows have struggled to keep up, leaving the market in a deep deficit. China is restricting silver exports from the new year. Last month, US designated silver as a critical mineral along with copper. India has added to the supply squeeze by importing 6,000 tons of silver this year, nearly a fourth of the total global production. Gold's story is more classic. Aggressive purchases by central banks even as they slash interest rates, strong ETF inflows, a weaker dollar, and geopolitical flashpoints from Eastern Europe to West Asia have kept safe haven demand elevated. A weak rupee has also pushed prices up in India. Beyond the headline, metals, platinum and palladium have also ridden the 2025 precious metals wave, but with very different stories. Platinum has been the quiet comeback kid, jumping to a 12-year high on the back of repeated supply deficits and resilient demand in industry and jewelry. Palladium, once the rock star of the auto catalyst world, has lagged in comparison, with more modest gains and a softer outlook as gasoline, car demand plateaus and recycling ramps up. Most analysts still see room for precious metals to hold elevated levels into 2026, though the call now shifts from how high to how volatile. Gold is expected to stay supported in a range as long as rate cuts materialize and geopolitical risks simmer, while silver remains a high beta bet on both the green transition and safe haven flows. Platinum looks set to benefit from ongoing supply deficits and could continue to claw back investor attention even as palladium drifts into a more subdued range-bound phase. For investors, the message from the so-called Goldilocks moment is simple. The metals trade is still very alive but demands more discipline, sharper risk management and a strong stomach for the gut-wrenching swings. Bureau Report, Business Today TV.